Welcome to the Deep Dive. Today, we're tackling something that's definitely been on a lot of people's minds: the future of AI stocks.
That's right.
We've gone through a really interesting stack of sources, looking at why three tech giants, we're talking Nvidia, Apple, and Amazon, why they're being watched for some pretty significant growth in the second half of the year.
Yeah, the signals are there.
So our mission here for this deep dive is really to unpack all these insights for you, cut through the noise a bit and get straight to what seems to matter.
Exactly. We'll start with the general landscape, look at why AI stocks got so hot in the first place.
Right.
Then we'll zero in on each company. We'll look at how they've sort of navigated the recent challenges and why, based on what we read, their future's looking, well, promising. The goal is to give you a clear, comprehensive picture of these potential movers.
Okay, so let's unpack that overall excitement around AI first. I mean, the material we review really highlights how AI stocks they soared in 2024.
Absolutely skyrocketed.
Driven by this huge promise, right, that AI could revolutionize businesses, save time, save money.
Lead to major discoveries across all sorts of industries.
Yeah, it really felt like the future just landed.
But what's interesting, and the sources point this out clearly, is that despite that massive initial surge, these companies did hit a rough patch for a few months recently.
Some headwinds.
Exactly. Concerns about a potential economic slowdown, geopolitical stuff, particularly tariffs that weighed things down.
Okay.
But the good news, according to the material anyway, is that some of that uncertainty seems to be lifting now. Which suggests, maybe better days ahead for AI stocks, and specifically for these three: Nvidia, Apple, and Amazon. The market seems to be looking past those immediate issues.
All right, so with that big picture in mind, the AI boom hitting these economic headwinds, let's zero in. How did our first tech giant, Nvidia, handle it all, especially the tariff situation?
Yeah, Nvidia's story here is fascinating.
Our sources talk about how President Trump's plan for import tariffs really put pressure on tech stocks. Nvidia got pushed down nearly 30%.
That's right, almost 30% from the start of the year through early April. It was a significant drop.
And there was that temporary exemption for electronics, which kind of hinted that chips were probably going to face tariffs eventually. Sounds like they were right in the firing line.
They definitely were. So the big question is, how did they bounce back so strongly?
Right.
Well, the analysis shows a few key things. First, there's this growing optimism that maybe the tariffs won't be quite as bad as first feared.
Okay, bit of relief there.
Yeah, and second, their first quarter earnings were just incredibly strong.
That revenue number was huge.
It really was, up 69% to $44 billion. And crucially, demand stayed really strong. Customer spending plans for the year, apparently still intact.
So deep underlying confidence, despite the noise.
Seems like it.
Okay, that tariff rebound is one thing, but looking deeper, did the sources mention anything about strategic moves? Things they're doing for long-term resilience beyond just bouncing back?
Oh, absolutely. And this connects right back to the bigger picture. The data shows Nvidia is actively and significantly investing in U.S. manufacturing.
Bringing it onshore.
Exactly. And look, this isn't just about dodging potential future tariffs. It seems like a strategic long game.
How so?
Well, it de-risks their supply chain, right? And it positions them as a key national tech asset. That could make them less vulnerable down the line compared to some rivals.
Smart. And anything else?
Plus, they're sticking to this relentless plan.
Yeah.
Update their chips every single year. They're aiming to stay way ahead of the competition in a really fierce market.
Okay, so they're investing domestically, keeping the innovation engine running full throttle. The big question for listeners then is, how's the market pricing this? What's the valuation look like now?
Right now, Nvidia is trading around 33 times forward earnings estimates.
Which is down quite a bit, isn't it?
Yeah, significantly down from about 50 times just a few months back.
Yeah.
So the sources suggest this current level actually gives the stock plenty of room to run in the second half.
And those margins?
Oh, that's 70.11% gross margin. It's stunning. It basically shows incredible profitability per chip.
Which means cash for R&D.
Exactly. Huge financial firepower to keep investing and maintain their lead. Even that tiny 0.03% dividend yield tells you they're all in on growth, not paying out profits right now.
And the market cap, for context?
Currently sitting at $3.5 trillion, a real heavyweight.
Okay, so while Nvidia seems to have navigated the tariff storm through investment, Apple, our next company, faced perhaps an even more direct challenge from trade issues, didn't it?
Yeah, Apple's situation was, let's say, particularly sensitive.
The sources suggest Apple might have suffered the most among the big tech names from all that tariff turbulence. President Trump reportedly wasn't happy about iPhones mostly being made abroad,
Right.
and even threatened a 25% tariff specifically on imported iPhones.
It felt like a very real threat at the time. And the analysis does highlight Apple's strategic response, which was already underway, frankly.
Diversifying manufacturing.
Exactly. Big efforts to diversify, with a clear plan to move a lot of production from China, particularly to India.
But there's still uncertainty.
There is, because the president's stated goal, or desire, was for iPhone production to be right here in the U.S.
Which would hike up the price massively.
Drastically, yeah. And all this tension, this uncertainty, it definitely hurt Apple's stock. It's down about 20% since the start of the year.
Okay, so given those pretty serious challenges, tariffs, stock dip, why do the sources frame this as a potential buying opportunity? That seems counterintuitive, maybe.
Well, the viewpoint presented in the material is essentially that, the U.S. government probably doesn't want to completely destroy Apple's growth.
Right. It's a huge American company.
Exactly.
Yeah.
So the thinking is that some kind of reasonable agreement is possible, maybe involving incentives for more domestic production, perhaps.
So a bet on negotiation.
To some extent. And the idea is that any positive news on that front, any sign of a resolution, could spark a pretty significant stock bounce in the coming months.
Okay, that's the political angle. But beyond that, what about Apple's fundamental strengths? What makes it resilient, according to the sources?
Yeah, and this is really key. The analysis strongly emphasizes Apple's incredibly profitable smartphone empire. They talk about its tremendous moat.
That competitive advantage.
Precisely. It's this powerful shield protecting its market share, its profits. And it's not just brand loyalty anymore.
No.
The sources suggest this moat is now acting almost like a shock absorber against these global trade tensions. It lets them shift manufacturing around without losing their core base.
Ah, that's interesting. Flexibility.
It's a resilience few other companies could likely match.
Yeah.
So these core elements, the moat, the ecosystem, according to the material, they should support growth long term.
So the thinking is, buying now could mean gains soon, but also sets you up for the long haul.
That's the suggestion. Yeah. For context, their market cap is $3.0 trillion. Gross margin, still very healthy at 46.63%, and they do offer a small dividend, 0.50%.
Okay, finally, let's turn to Amazon. The sources note its performance has been a bit, sluggish recently, down about 3% for the year.
Yeah, relatively flat compared to the others we've discussed.
And the concerns there were also tariff-related, affecting both e-commerce and AWS.
Primarily, yes.
Right.
Worries that tariffs could hurt the massive e-commerce side, imported goods, and also potentially impact cloud computing, AWS.
But similar to the others, the worst-case scenario seems less likely now.
That's what the sources indicate, that the worst-case tariff outcomes have largely been avoided. Progress seems to be happening on trade agreements, leading to an expectation that there won't be a major hit to Amazon's growth from tariffs going forward.
That's a relief for them, I imagine. But what really stood out to me in the material was how Amazon apparently prepared for tougher times, even before the tariff issue was resolved. Can you elaborate on that?
Yes, that's a really sharp observation. The data clearly shows Amazon undertook a major revamp of its cost structure over the last couple of years.
This was driven by inflation?
Primarily, yeah. They faced serious pressure from rising inflation, like many companies. But this wasn't just trimming budgets.
No.
It was described as a comprehensive overhaul. And it helped them get back to growth in just 1 year.
Wow, that's fast.
It is. And it strategically positioned them to maximize profit during future challenges, including, managing any potential tariff impacts.
Yeah.
It was really proactive.
Got it. So they tightened the belt effectively. What about revenue drivers? What does the analysis point to for the second half of the year?
Well, they mentioned the usual big events like Prime Day, which typically happens later in the year. That's always a potential booster.
Sure.
But maybe even more significantly, the sources highlight the tremendous growth AWS is seeing from its AI efforts.
Yeah, AWS and AI seems like a huge story.
It really is. They've reached a $117 billion annual revenue run rate just from AI-related services.
Can you unpack that run rate idea quickly?
Yeah, sure. It basically means if they keep up their current pace for the next 12 months, they'd bring in $117 billion. It's a projection based on current momentum, and it's a massive number, showing sustained demand.
Okay. And we're still early in the AI game overall.
Exactly. The sources fully expect ongoing strong growth there, especially since AWS is the world's #1 cloud provider. They're the foundation for so many AI applications.
Right, the infrastructure layer. So with that strategic cost management and the AWS AI boom, how's the market valuing Amazon right now?
Amazon shares are currently trading around 34 times forward earnings estimates.
Which is similar to Nvidia, interestingly.
It is, and the sources describe this as, again, a reasonable level, not hyperinflated like we've sometimes seen in the past. It suggests investors see a more grounded but still very significant growth path ahead. Could prompt buying activity and help the stock, take off in the second half.
Seems plausible. And their market cap?
Market cap is $2.2 trillion. Gross margin is strong at 49.16%. And notably, no dividend yield currently. They're reinvesting everything.
Okay, so let's try and pull this all together. We've looked at Nvidia, Apple, and Amazon. Despite facing these headwinds, tariff worries, economic slowdown concerns, the sources suggest they're each positioned in their own way for potential growth later this year.
Yeah, each with a distinct set of strengths, right?
Exactly. Nvidia's got that core chip demand plus the strategic domestic investments. Apple has its almost legendary competitive moat and that manufacturing agility. And Amazon, that proactive cost overhaul and the sheer power of AWS fueled by AI.
And if you connect it back to the bigger picture, it really highlights how these companies aren't just, passively reacting to this dynamic global economy.
No, they're actively adapting.
Actively adapting, and they're leveraging AI's massive potential. It's not just about the tech itself. It's about the strategic positioning, how they navigate these complex global currents.
It's a good reminder, actually, that even these titans aren't immune to external pressures.
Not at all.
But their ability to pivot and adapt, like the sources highlight, that's really what sets them apart.
That seems to be the key takeaway.
So for you, the listener, maybe the takeaway isn't just about, specific stock movements. It's more about understanding this complex dance between technology, global politics, and really shrewd corporate strategy that's shaping our world.
Absolutely. And maybe this raises a final question for you to think about. As these tech giants keep weaving AI deeper into their operations, and as they continue to navigate these global economic shifts, how might their individual strategies, NVIDIA's chip focus, Apple's ecosystem, Amazon's cloud and commerce blend, how might those choices influence the broader tech landscape, maybe even how we all interact with technology every day, going far beyond just their stock price?